Ganpati festival to all our viewers. Welcome to Market Cafe, your daily stop from all the buzz from the Lal Street and beyond. Now, as we seek Lord Ganpati's blessings, we'll also guide you through the big market trends, stock stories and global cues that matter today, and also tell you about all the stocks that you need to keep on your radar. So let's get started with how the US markets fared overnight first of all. Now, Wall Street, that closed lower on Monday as investors booked profit after Friday's big rally that we saw. The Dow slipped about 350 points or about 0.8%. The S&P 500, that fell about 0.5%, whereas the Nasdaq, that edged about 2%, 0.2% lower. Now, investors did remain hopeful that the prospect of lower interest rates coming in September, as hinted by Federal Reserve Chair Jerome Powell last week at the Jackson Hole Symposium, and that it will strengthen parts of the market that appear due for a breakout. For instance, small caps are just one example. Now, the street is also hopeful that Nvidia's earnings report on Wednesday will bolster the mega cap tech trade following its recent slide. Now, shifting focus to what all that we need to watch out for today. Now, the focus shifts to key economic data, durable goods, consumer confidence, home prices, and Richmond Fed's survey. These are the things that we'll be watching out for in today's trade as far as US trade is concerned. Apart from that, investors are also watching for comments from Fed officials and looking ahead to Nvidia's earnings. Well, apart from that, later this week, the Fed's preferred inflation gauge, the PCE index, will also be closely tracked. Well, that's about Wall Street, but let's also take a look at how the commodity markets are shaping up. Now, oil prices, they did climb on Monday, but slipped this morning at a time when traders are anticipating more US sanctions and Ukrainian attacks targeting energy infrastructure in Russia that could disrupt supplies. Now, Brent, it was down about 0.5% at the $68.47 level. Now, remember, US President Donald Trump has said again on Friday that he would impose sanctions on Russia if there was no progress towards a peaceful settlement in Ukraine in 2 weeks. Now, he has also said that he may hit India with harsh tariffs over its purchases of Russian oil. So that's something, that commentary is something that we are watching out for, and the action that follows. Now, over the weekend, I remember US Vice President J.D. Vance said that Russia made significant concessions towards negotiated settlement in the 3.5-year war. Apart from that, let's also put the spotlight on gold prices. They are holding steady as the market's focus is shifted to the upcoming US PCE data, as I mentioned, on the cues for Federal Reserve's policy path, while the stronger dollar has capped some of its gains. Next up, let's shift focus back home and take a look at how the Indian markets fare. Well, it was a steady start to the truncated week on the Lal Street yesterday. Nifty briefly touched that 25,000 mark before giving up some of the gains, but it did manage to end the session comfortably in the green. Sensex too gained over 300 points, helped by a rally in the IT names. My colleague Snehi is here with all the details on this front.
Well, yes, all in all, it was a decent trading day coming in for our market yesterday. If you take a look at how the levels have panned out, it's been a gain of about 0.4% coming in on the Nifty. So 24,967.5 to be very precise, that's where we've ended. So slightly off the day's high, but slightly also off the day's low. So somewhere in the middle of the range is where we've ended for the Nifty. Sensex too, similar moves coming in. A 0.4% uptick is what we've seen on the Sensex. What's not done well at all is the Nifty Bank that closed very nominally with a negative bias yesterday, and so was the case with the Nifty small cap space, although the mid cap spaces closed very marginally in the green. So lackluster moves coming in from the broader end of the market, and all the heavy lifting yesterday was done by the benchmarks, and it was Nifty IT through and through. That was the top sectoral gainer yesterday. Big gains coming in on names like Infosys, TCS, HCL Tech, Wipro. These are the top 4 Nifty gainers itself, and all 4 from the larger IT group of stocks. So Infosys 3% higher, TCS, HCL Tech, both of them up 2.5%. Following that, you had Hindalco, Coal India. So some of these metal counters have also done very well yesterday. From the losing side, Adani Enterprises, Apollo Hospitals, Nestle, BEL, SBI Life were some stocks that were not doing well and causing pressure on the Nifty. So sectoral, it was not only the broader, the large caps from the IT space. It was names like Emphasis, Persistent, OFSS, Tech Mahindra, LTI, Mindtree, Coforge. The entire Nifty basket has closed with massive gains yesterday. Following that, real realty, metal, pharma, auto have done well. So names like Sobha, DLF, Oberoi Realty, Prestige, Godrej Properties have done well. On the flip side, some more pressure rather on Nazara Tech, a more 3.5% cut coming in on the stock, and PSU banks were absolutely lackluster, with Union Bank, Canara Bank, Maharashtra Bank, Central Bank, Bank of India seeing some of the big cuts coming on that basket. So well, that was a roundup of the kind of trading day we've seen yesterday. Lots of stock specific action, but the Nifty managed to close in the green. As we head into a truncated week and a holiday tomorrow, let's see what the markets are able to do today. If they're able to cross and hold on to that 25,000 mark, because remember, when we come back from that holiday, we are also going to see the tariff impact of the secondary 25% tariff that Trump may or may not impose on India. So lots of variables, but well, yes, all eyes are going to be on how the market trades today.
All right, thanks Nehi for that roundup. We'll surely watch out whether or not we're able to hold up that 25,000 mark and see how the tariff impact follows in the remaining week. But before that, we have Sharad now joining us with the F&O snapshot and how it's looking today. Sharad, over to you.
In the overall F&O setup, we are seeing a clear divergence between Nifty and Nifty Bank, but overall, the important support levels are still being respected. The India VIX is still below the 12 mark, while the PCR in all expiries, they are also coming at the comfortable rates. Interestingly, Nifty index features, there is a long build-up and rollover of roughly 32.5% with the highest open interest strike price coming for both put and call at 25,000 levels. For Bank Nifty, the story is different. And of course, the support is not coming especially from ICICI Bank, as the activity includes long unwinding and the rollovers is the shade below 24%. The highest open interest strike price for put stands at 55,000 and for call stands at 56,000. IFI long positioning after the previous trade, that has actually improved, and they have added almost 7,887 long contracts, and that is coming in at almost 13.4%, and this is a very stark improvement coming as short covering is seen in the FI counters. DI counters, generally it's stable at 63% when it comes to the long positions, and the stocks which are out in, which is still in the ban, they include RBL Bank and Titagarh, while the stock which is out of ban is PG Electroplast.
All right, so that's about the F&O setup and how it looks today. But Sharad, stay on with us and also tell us about all the stocks that you're keeping on your radar today. Which ones are on your list?
Interesting development coming in for AV Capital, as the company has received RBI approval for the appointment of Vishakha Mulya as MD and CEO for the next 5 odd years. This augurs positively well for the company. And also Naveen Fluorine would be in focus, as the company has announced Rajendra Sahu as the CEO for the CDMO business, and he will be actually resigning from his post on September 20th, and Vijay Kawar would be appointed as the CEO designate. Apart from this, Vodafone Idea negative news flow coming in, as Department of Telecom rules out AGR relief for Vodafone Idea. Up next, pharma stocks, negative reaction expected, as Trump has stated that he would be reducing the drug prices by 1,400 to 1,500%. Because of that, there would be more competition coming in certain therapies. That's what the analysts say. IRB Infra, our next stock, where the Gujarat HAM project is expected to receive 180 crore rupees of annual cash flows.
All right, so those are some of the stocks that we are tracking on the back of news flow. But Ashesha is here with a roundup of some of the other stocks that we need to keep on our radar today. Ashesha, very good morning. Which are the stocks on your list today?
Well, yes, good morning. First up, let's put the spotlight on ONGC, where the company said that they've commenced natural gas sales in the state of Rajasthan. So positive news flow coming in for ONGC. The stock will be in focus on the back of that. Meanwhile, let's also put the spotlight on Hindustan Zinc on the back of their expansion plans. Remember, the company had earlier said that they are looking to double their capacity to 2 million tons, and now for that they've announced capacity capital expenditure, where they said that they will be they are looking to invest about 30 to 35,000 crore rupees in order to double their capacity to 2 million tons. This is over a period of next 5 to 6 years. So on the back of this capex and capacity expansion plans that have come through, Hindustan Zinc will also be in focus on the back of that. Meanwhile, let's also put the spotlight on Protean eGov on the back of a new order that the company has won, where the company said that they have received 1,160 crore worth of order from UIDAI. So some order wins coming in, positive news flow for Protean eGov. Meanwhile, Tata Motors, the demerger is in process, and the company now says that they've received NCLT approval for this particular demerger, and the effective date of demerger will be the 1st of October. Remember, most of this is already priced into the stock, but a big news flow coming in with respect to approval for the demerger from NCLT, so the stock will be in focus on the back of that. Lastly, let's also put the spotlight on GCPL. The company has come out with their annual report, and the company says that they will continue to focus on premiumization, and access packets will now be introduced in rural markets as well. So some focus plans and some expansion plans coming in for Godrej Consumer Products. Keep an eye out on this one as well.
All right, thank you, Ashisha, for all those details. Lots of stock-specific action expected today. But apart from stocks, let's also take a look at which are the cues that we need to watch out for in today's trading session and later in the day. And Snehi is here with just that list.
Well, yes, lots of cues to watch out for. The most important thing to track is going to be the MSCI Rejig Index. To be precise, it's the MSCI Global Standard Indexes. That changes in the constituents of this index will take place towards market close. So the last 1 hour, last half an hour of trade could be volatile. Names like Swiggy, Vishal Megamart, Vadi Energies, Hitachi Energy India are going to be included, and the exclusions include names like Sona BLW and Thermax. Other than that, from the US, you have Conference Board consumer confidence numbers coming out, and from Japan, you have services PPI. But shifting focus back home, lots of stocks to track. HDFC Bank will be trading ex-bonus in the ratio 1:1. Karur Vyasa Bank will be trading ex-bonus in the ratio 1:5. PM Modi is going to be inaugurating Maruti Suzuki's first BEV vehicle, which is e-Vitara in Gujarat, so watch out for that. Gillette India, JBM Auto, Mass Financial, Vedanta will be trading ex-dividend, and it's going to be the last day to buy the names of Aster DM, Guj Pipavav, Jyoti Labs, Vedant Fashion to be eligible for their dividend record date if you wish to do so. In terms of AGMs, all eyes are going to be on Grasim, Chambal Fertilizer, Power Grid, CSD Bank, HCL Tech, Niva Bupa. A lot of other companies are going to be in focus on the back of their AGMs. In terms of the primary market, Vikram Engineering IPO will be opening, and Vikram Solar IPO will be listing on the bourses. And in terms of other events, then some important commentary to track. Bank of France Governor Francois Villarao de Gallo is going to be speaking, and Richmond Fed President Tom Barkin is also going to be speaking. So watch out for all of these commentaries as well as all of these cues.
All right, then lots of cues to watch out for today. But on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side. The decline is coming at a time when US President Donald Trump's comments on China have come. He's reportedly threatened to charge China 200% tariffs or something like that if they do not export rare earth magnets to the US, while also warning levies on countries that do not remove digital taxes and related regulations. First up, let's take a look at how S&P ASX is faring. Now, that's trading about 0.4% lower. On the other hand, we have Hong Kong's Hang Seng Index, which is also down about 0.5% at that 25,700 odd level. On the other hand, we have Japan's Nikkei, which is leading the losses and is down about 1% as we speak at that 42,360 odd level. On the other hand, China's Shanghai Index, that is also seeing a decline down about 0.3% as we speak at the 3,870 level. On the other hand, South Korea's Kospi Index, that's also trading lower, about 0.8% lower as we speak at that 3,180 level. On the other hand, if we take a look at what to expect from the Indian markets, now yesterday we did close, the Nifty did close just about just about 35 points shy of that 25,000 mark, and today also we are expecting a gap down, opening about 0.28% lower, that is about 70 points lower is what we are expecting. The Nifty implied open stands at 24,918 as you can see on your screens. So a gap down opening is what we are expecting for the Indian markets as well, tracking its Asian peers as well as the Wall Street. Well, let's shift focus and talk about some other domestic stories as well. The Union Agriculture Minister Shivraj Singh Chauhan has reaffirmed India's unwavering commitment to its farmers, while Prime Minister Narendra Modi has emphasized that the interests of farmers, cattle rearers and small-scale industries remain paramount. Prime Minister Modi also acknowledged potential pressures but vowed to stand firm. However, a stark comparison between Indian and US farmers highlights the challenges ahead, revealing a long road to bridge the gap for India's agricultural sector. Political rhetoric and claims apart, can India's agricultural sector withstand the force of US tariffs as the deadline looms? In fact, let's listen into what Agriculture Minister Shivraj Singh Chauhan had to say regarding the interest of farmers.
दुनिया के धारा हमसे कह रहे थे समझौता करो, उनके कृषि उत्पादों के लिए हम बाजार खोल रहे हैं, हमारे द्वार खोल रहे हैं। उनके किसानों के हजारों हेक्टेयर जमीन, वहां अलग सब्सिडी मिलती है, वो जीएम सीड्स का उपयोग करते हैं और हमारे छोटे किसान उनका मुकाबला कर पाते क्या? भारत ने तय किया राष्ट्रहित सर्वोपरि, कोई भी समझौता देश के हितों के खिलाफ नहीं होगा। हम अपने किसान के हितों से कोई समझौता नहीं करेंगे। हम अपने मछुआरे हो, पशुपालक हो, उनके हितों से कोई समझौता नहीं करेंगे। सोचा था कि हम डर जाएंगे, लेकिन आज का भारत है जो आत्मविश्वास के साथ भर के खड़ा हुआ है।
All right, so that's the latest word coming from the Agriculture Minister. But moving on, the Prime Minister is on a 2-day visit to Gujarat, inaugurating projects worth about 5,400 crore rupees. Now, in a speech over there, he addressed small entrepreneurs, shopkeepers, farmers, and also cattle rearers. Let's listen into his comments.
अपने लघु उद्यमियों से कहूंगा, मेरे छोटे छोटे दुकानदार भाई बहनों से कहूंगा, मेरे किसान भाइयों से कहूंगा, मेरे पशुपालक भाई बहन से कहूंगा, और मैं गांधी की धरती पे से बोल रहा हूं, मेरे देश के लघु उद्यमी हो, किसान हो, पशुपालक हो, हर किसी के लिए मैं आपको बार बार वादा करता हूं, मोदी के लिए आपके हित सर्वोपरि है।
All right, so that's the Prime Minister talking about farmers and how we plan on fighting US tariffs as and when they come in. But moving on, Union Home Minister Amit Shah, he has defended the Constitution 130th Amendment Bill, which seeks the automatic removal of top elected officials held in custody for 30 consecutive days on serious criminal charges, stressing that the country cannot be governed from jail and accusing the opposition of political doublespeak for opposing the legislation. He also stressed that Prime Minister Narendra Modi himself had insisted on including the office of Prime Minister in the ambit of the bill. Let's listen into his comments.
इस देश में आज एनडीए के मुख्यमंत्रियों की संख्या ज्यादा है। प्रधानमंत्री भी एनडीए के हैं, श्री नरेंद्र मोदी प्रधानमंत्री। तो ये बिल सिर्फ विपक्ष के लिए क्वेश्चन खड़ा नहीं करता, हमारे मुख्यमंत्रियों के लिए भी क्वेश्चन खड़ा करता है। मैंने जो सुना वो कह रहे कि आपके लोगों के सामने एफआईआर नहीं होती है। ये जनता को गुमराह करे। उनको मालूम है कि किसी भी व्यक्ति के खिलाफ आरोप है तो आप पब्लिक इंटरेस्ट लिटिगेशन के माध्यम से कोर्ट के सामने जा सकते हैं। कोर्ट ऑर्डर करेगी किनके खिलाफ एफआईआर करो। अगर ज्यादा ही गंभीर मामले हैं तो कोर्ट मॉनिटर भी करती है। इसमें पक्ष विपक्ष कहां आता है? बट ये एक सेकंड मेरी बात पूरी नहीं हुई है। इसमें पक्ष विपक्ष नहीं आता है। और दूसरी बात, इसमें 30 दिन तक जमानत का प्रावधान किया गया है। अगर फर्जी टाइप का केस है तो देश की हाई कोर्ट और सुप्रीम कोर्ट आंख मूंद कर नहीं बैठे हैं। किसी भी केस में हाई कोर्ट और सुप्रीम कोर्ट को जमानत देने का अधिकार है। अगर जमानत नहीं मिलती है तो आपको पद छोड़ना पड़ेगा। मैं एएनआई के माध्यम से देश की जनता को और पूरे विपक्ष को भी पूछना चाहता हूं, क्या कोई मुख्यमंत्री, कोई प्रधानमंत्री या कोई मंत्री जेल में रहकर सरकार चला सकता है क्या? इस देश के लोकतंत्र के लिए शोभा रूप है क्या? और अगर 30 दिन के बाद जमानत मिल जाती है तो वो फिर से शपथ ले सकते हैं।
All right, so that's the Home Minister on the 130th Amendment Bill. But moving on, with the festive period around the corner, this year's festive sales could lead to a tough battle for quick commerce and e-commerce players. An expansion into quick commerce by established players and new rivals continues. Now, in an exclusive interaction, Redseer shared 2025 festive outlook. Let's listen into what's the expected GMV for this festive period.
So we are projecting close to a 20 to 25% growth in e-commerce GMV this year. And compared to last year, the year-on-year growth was actually around 11%. So we are projecting almost double growth this time around on e-commerce GMV at an overall level. Yes, I think it will be, we have that in 1,000 crores. That's how we kind of measure it. So it's expected to be more than 115,000 crores this year. I think it was somewhere close to 95,000 crores last year or so. And this we are talking about a 30 to 35 day festive period leading up to Diwali.
All right, so that's about the festive cheer and the festive shopping that is expected. But moving on, Nidhu Saxena, who's the MD and CEO of Bank of Maharashtra, talks to us about the bank that will come out with a QIP of at least 2,000 crore rupees by FY26. Let's listen to her comments.
To comply with the SEBI norm, even at the current price around 2,000 crores, but should suffice. But when I make the effort, last year we had done with 53 investors participating 3,500 crores. So if that was the number which was, and we have not stopped after doing the equity raise, non-deal road shows in US, UK markets, UAE markets, Singapore, Hong Kong, we started off. We have seen huge interest in India, and within which BFSI space and a bank like, mid-sized bank like us, performing, excellent on the ROA, ROEs, names, and those parameters which are of keen interest to investors. So yes, I mean, anything, right.
Has SEBI extended the timeline to actually?
So for August, for us the dispensation is August 2026, and there will be some other players who have, I think, some more time to go, more effort to go. In our case, we can, in the next tranche of capital raise, comply with this requirement also. So that's what the plan is.
Any impact on the FY26?
So that's what the plans are. At the opportune time, I said, we will come back and share our plans well in advance, and what mode and what time we will let you know.
All right, so that was the MD and CEO of Bank of Maharashtra on the upcoming QIP. But let's just focus some more national stories then. Now, Indian President Draupadi Murmu met Fijian Prime Minister at Rashtrapati Bhavan in New Delhi. Now, the high-level meeting focused on strengthening India-Fiji diplomatic relations, bilateral cooperation and shared interests in trade, culture and regional development. Next up, India has communicated details about possible flooding in Pakistan. The communication has been made entirely on humanitarian grounds. India has also stressed that the warning was communicated through diplomatic channels rather than the Indus Water Commission. Next up, Kolkata police have filed a charge sheet against 54 individuals, including several prominent left front leaders, in connection with the vandalism at Arjikar Hospital on August 14th. The incident occurred during protests over the brutal rape and murder of a PG trainee student on August 9th. Next up, Tokyo Olympic silver medalist Mirabai Chanu has won gold at the Commonwealth Weightlifting Championship 2025 in Ahmedabad, competing in the women's 48 kg category. She lifted a total of 193 kilos, setting a record in all three lifts. Now, with this, Chanu has also secured direct qualification for the 2026 Commonwealth Games in Glasgow. Next up, India will continue purchasing oil from sources offering the best deal despite mounting US tariffs on Indian goods. New Delhi's envoy to Moscow has said. Now, speaking to Russian state news agency, India's ambassador to Russia, that's Vinay Kumar, he's targeted Washington's decision to double tariffs on Indian imports in response to New Delhi's continued energy trade with Russia. My colleague Sumita Karir is now joining us with more details on this front.
That's right. India's ambassador to Russia, Vinay Kumar, has made it clear that New Delhi will not bow down to American pressure over energy trade. In fact, he's given an interview to Russian state news agency TASS, where he stated that Indian companies will keep purchasing crude oil from the cheapest available source, and that includes Russia as well. The priority is energy security for 1.4 billion people is essentially what Kumar stated, and he called Washington's move to impose a 50% tariff on Indian goods baseless and unfair. Remember, this is coming in after Donald Trump put additional 25% tariffs on India just for doing energy trade with Russia. Meanwhile, just last week, if you remember, Russian diplomat Roman Babushkin said that India is receiving a nearly 5% discount on Russian crude oil purchases. Remember, India has emerged as the second largest buyer of Russian oil after China. However, the U.S. has not called out China and has been unrelenting on in its attacks on India's energy trade with Russia. That's also been called out by India as well, and this is something that the External Affairs Minister just 2 days back called out. In fact, as far as relentless attacks from the United States is concerned, while Peter Navarro has stated that India sells its goods, that it then uses that money to buy Russian oil, which helps its oil companies earn massively. Meanwhile, New Delhi has consistently dismissed Washington's accusations of indirectly funding the Ukraine war. Just last week, like I was stating, Jay Shankar, during a visit to Moscow, pointed out that India is not the largest buyer of Russian oil. It, in fact, is China.
All right, thank you, Sumita, for getting us all those details. Now, let's just focus to some other global news then. Now, President Donald Trump has said that he has already fired Federal Reserve Governor Lisa Cook, according to a letter addressed to her posted on his social media. Cook has recently come under fire by Trump for alleged mortgage fraud. Now, the Justice Department has said that it plans to investigate those allegations. Now, remember, this is the first instance of president who fired a central bank governor in 111 years of history. Now, the unprecedented move represents significant escalation of president's battle against the Fed, which he has blamed for taking too long to lower interest rates. Next up, Trump has vowed to impose substantial new tariffs and restrict U.S. chip exports for all countries that do not remove digital taxes and regulated regulations. Now, he took to Truth Social to announce that, and he said that he will impose substantial additional tariffs on all the countries that put digital taxes, legislation, rules or regulations on notice, that unless these discriminatory actions are removed. He will also continue to impose substantial additional tariffs on the countries that export to the USA. Now, remember, Trump has long sought to pressure trade partners to drop the taxes which affect the US tech giants like Meta, Alphabet and Amazon. Meanwhile, Trump has said that he would slash drug prices between 1,400% and 1,500%, reaffirming his administration's aggressive stance on pharmaceutical pricing and plans to impose higher tariffs on imported medicines. Now, this announcement comes nearly a month after Trump sent letters to leading pharma companies in the U.S., setting a September 29th deadline to lower drug prices. Next up, tech giant Intel has warned adverse reactions from investors, employees and others to the Trump administration, which has taken 10% stake in the company in a filing citing risks involved with the deal. Now, for Intel's international customers, the company is now directly tied to President Donald Trump's ever-shifting tariff and trade policies. All right, so those were some of the top global stories that we're tracking at this hour. But on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side. Now, the United States has officially issued a public notice imposing additional 25% tariffs on imports from India, with the new duties set to take effect from August 27th, that is tomorrow. Now, the tariffs will apply to a broad range of Indian products listed in the annex to the notice. The tariffs will apply to any goods that arrive for use or are taken out of warehouses after the deadline. And to discuss this further and what's the impact going to be on the markets following this development, I'm now joined by Sunil Subramaniam. Hi Sunil sir, thank you so much for joining us this morning. Before we get started with what's going to be the market impact, what are your first thoughts? There was some anticipation that this deadline may be extended, or at least a new date would be out when the US and India talks are going to take place, but so far there's no update on that front as well. So what are your first thoughts now that Trump has issued that official notification that these tariffs come into play from tomorrow?
Yes, I think that was anticipated. I think the only hope that India had in terms of these tariffs was that the Russia-Ukraine peace deal that Mr. Trump brokered, right? If that had seen a successful or a hint towards a positivity, the second 25%, which was a political tariff, could have gone away. But the first 25% is a basic thing, and the trade delegation, as we all know, cancelled their visit to India. So I think this was more or less anticipated in terms of the country. And even the statements from both sides are indicating about strengthening their stance. So I don't think this was a very big surprise that there was no hint that he was going to cancel that 50% order. So this clarification and everything is just strengthening that purpose. In fact, Mr. Trump, even against China, has used very strong words yesterday. So clearly he is standing his ground on the tariff front, and we're not going to see any light very soon in terms of a resolution, especially for both India and America.
Absolutely. And sir, now what about the markets? How do you expect the markets to react? Do you believe that the downturn that we have been seeing, not the downturn exactly, but we have fallen below that 5,000 mark, and we've been range bound, though, many experts have suggested that there's going to be some festive cheer. But do you think the tariff news, the official announcement that has come, that is going to weigh heavy on the market, and we could still be far away from that 25,000 mark?
Well, not really. I think that the news was more or less discounted in the market. I don't think this is a surprise. It was expected to happen. There was a few people who had a faint hope that some last minute, rabbit out of the hat would be pulled out. But I don't think there was any ground level signals from either our side on the trade ministry side or from the US. So I think the market will take this in its stride. What it does, however, is that FIIs were probably more keen to look at whether India and America are working towards a resolution. And probably, as you know, even after the GST announcement and the S&P upgrade last week, FIIs were more or less sellers. I think only in 2 days out of the 5 days did they buy, and the rest they were sellers. So FII mood is likely to continue to be subdued towards India, especially given the fact that our valuations continue to be high, and the markets, whatever the rally in certain specific sectors, has not made them any cheaper. So I think the situation will be a kind of status quo. FII flows will remain away, and domestic will be looking at sectors that can benefit, and there will be some sector rotation. So markets will be in a consolidating phase, but I don't see a strong negative reaction to the fact that he has signed the order yesterday.
Okay, so a strong negative reaction may not come in the markets. That's the word coming in. But sir, talking sectors now, most of these capital goods companies, they had in their guidance that they are cautiously optimistic, especially because of the uncertainty around tariffs. But now going forward, what kind of impact do you expect these companies to face, and how will we see their earnings shape up in the quarters to come?
The quarters to come, the earnings may not be very great because private capex has not taken off. But I get confidence from the fact that the CEO of L&T has said in multiple interviews that he's seeing the green shoots in terms of private sector orders coming into them for execution. That's one. Second is, we all know that the GST impact, there may be a delay because the dates of the GST reduction are yet to be finalized. So people may postpone their purchases on the consumption side for about 15 days to a month. But once the festival season comes in and the sales happen, the capacity utilization in the country will go up. And I expect this to give a boost to capacity utilization going up beyond the 78, 79 to 80% even. So when that happens, private sector capex will join the party. And I think if you have a slightly medium-term outlook in terms of a year and a half, capital goods, in fact, is a very good sector to invest in because it is not related to the tariffs. The private sector capital goods are related to domestic consumption and domestic capacity going up so that they build up more capacity to cater to that demand. So to some extent, it's reasonably insulated from the tariff scenario. And I would actually say that it's a good time to go and invest in the broader capital goods sector, which is cement, industrials, building materials, steel, and EPC contractors and the like.
Right. So it's a good time to actually invest for a slightly medium to long-term perspective when it comes to the broader capital goods sector. That's the word coming in. But so what about sectors like auto and pharma? How do you think one must play these now?
I think auto I think had a good run last week because obviously auto is going to be the key consumption number that the Diwali season is going to affect because buying cars or upgrading their cars is one of the key consumer discretionary items that people focus on. So a lot of light on the auto sector, but in the auto sector, it's a very wide range of products there. So I think that with a good monsoon flowing through, I think the two-wheeler segment should see good numbers coming up even in the festival season. I see cars also at the entry level. You see a positive scenario because I think the cars above a certain level are probably going to be at the 28, which is going down to 18, so 10% relief there. So yes, that. But auto components, which are an export-oriented item largely, might see the impact of tariffs. Tractors, on the other hand, will benefit from the good monsoon. And finally, commercial vehicles also I see as a good time to pick up because with the capex cycle as it picks up, it's a commercial vehicle which will be needed to transport all the cement and steel and other goods. So I would say that auto is a kind of a very diversified pack and there are specific sub-segments that you need to look at carefully in terms of your investing decision, especially considering the fact that there has been a decent rally last week. On the case of pharma, I think the pharma number earnings have been very good. And I think overall our situation in pharma is a decent situation. But Mr. Trump's threatened tariffs going all the way up to 250% on pharma still remains like a Damocles sword hanging there. He's not acted on it, but he may act in the future. If he doesn't do anything about pharma, the pharma is a good space to invest in, especially if you consider that domestic pharma is in a good space like hospitals and diagnostics and all. I think they're in a good space. So I would say that in pharma, you can stay invested. And wait and see if Mr. Trump actually follows through on his threat to hike the tariffs there, which right now is not something that he's doing with any urgency.
Right. And so just two more points here I wanted to highlight. We were just talking about how Trump has actually asked the companies, pharma companies in the US to bring down prices. And now, essentially once imports become expensive, like when tariffs are imposed, it was the US consumer which was going to face a higher price. But he's actually asked for prices to, be lowered when it comes to drug prices. So how do you expect this whole picture to shape up then? And how will Indian companies stand to, benefit or lose in any way from this move?
So I think that two things. That one is that the reason he's written this letter is because the cost of subsidized pharma, the Obamacare, if you remember, is picked up by the US government. That's why for him that's important because they offer those medicines free to their public. So to that extent, the cost is borne by the government, not by the consumer. That's why he's written a letter to the big pharma companies saying reduce your prices. Now, I think that pharma companies will follow through and reduce prices because they're all sitting on very fat profits. As you know, the pharma products, once they get a patent, right, they get the super profit because they have spent years on research and development. So only when it goes from there to the generics part, right, does the actual costs come down or the prices come down. So to the extent that they all are sitting on huge profits, I'm sure the pharma companies, big pharma companies would do a reduction to favor Mr. Trump to get on his right side. But this would actually increase their outsourcing to India on the CDMO because the contract drug manufacturing when it's made in India is cheaper. So to that extent, it might be a perverse way, but because the prices are going to be reduced, they might actually increase outsourcing at the back end to countries like India, and China, which have a much lower labor cost. So we have to wait and see how that plays out. The second aspect is that on the generic side, anyway, the Indian companies which are directly exporting there, they are off-patent drugs. So these are not very expensive drugs. So I don't think Mr. Trump's focus is so much on the generics, which are more like a bulk purchase and which have come off the patent and already at kind of market-related prices. So I think that's the way it will happen. It might actually help the CDMO sector in India.
All right, so it might actually help the CDMO sector in India because once US companies are expected to lower their drug prices, they may be outsourcing it to, regions like India. That's the word coming in. Thank you so much, sir. Thank you so much for joining us this morning and helping us understand how this tariff saga is going to play out. Well, let's shift focus and move on. We're tracking the index rebalancing as well, where in focus is the MSCI August rejig. Now, what are the expected inflows and outflows? Sharad is here with all those details. Sharad, over to you.
The MSCI adjustment will happen today, and the last 1 hour of trade will be volatile for a lot of counters. Now, India is expected to have a net outflow of roughly $250 to $270 million. And let's look at the key inclusions, which should be very much important, especially in the last 1 hour of trade today. Inclusions include Swiggy, Vishal Mega Mart, Hitachi Energies and Vari Energies, where inflows in range between $230 to $293 million. Looking at the exclusions, Sona, BLW and Thermax make it to the list, where the expected flows go between $117 to $165 million. And also weight up is for CG Power, where we're expecting a $56 million of inflows, but weight down, that is where the majority of outselling is expected to happen, especially in the counter for Eternal, with almost $571 million of outflows expected. Also Asian Paints, JSPL, Havells, they also range between $40 to $102 odd million. Small cap index, the key inclusions include Sona, BLW, Thermax, and exclusions include Bharat Dynamics, and two other names also come, Nexus Select Trust and Inventurous Knowledge, to the list. Now, this entire setup, the inclusions and the exclusions and the flows have been sourced from Nuvama Alternate Equities.
Thank you, Sharad, for that update. But before we let you go, let's also understand what are the key triggers ahead for the market and which are the stocks that analysts are keeping under their radar as the Nifty retests at 25,000 level.
Well, yes, Nifty has retested the 25,000 levels, and we have taken an analysis from the Bloomberg, where we have taken the 12-month return potential, where the analysts are most bullish at. For Nifty, this includes Adani Enterprises, Adani Ports, both Adani packed between 27 to 29%, followed by, from the banking space, Axis Bank, where 25% 12-month return potential is expected. Also from the PSU, NTPC and ITC from the FMCG pack have made it to the list. Also, Shriram Finance, ONGC, ICICI Bank and Sun Pharma would be in focus, where the highest return potential is there, where the analysts are most bullish on. Now, of course, we spoke about the large caps. Let's focus on the mid caps and small caps. So we've taken Nifty 500, and over here also these stocks are there, such as NBCC, Raymond, PNB Housing Finance, and even GE Shipping, where the overall analyst community expects more than 40% returns over the next 12 months. Up against on this new list, we also have the Adani Energy Solution, Chennai Petrochem, Brigade Enterprises, Trident and Piramal Pharma also coming to the list, where the returns range between 33 to 41 odd %. And the key triggers ahead going for the markets, they include the GST and the government push, the festive season, recent ratings upgrade, a stable macro data, but tariff uncertainty still remains. And today, of course, there was an announcement also that Trump would be going ahead with the additional 25% tariffs on Indian products.
Thank you, Sharad, for all those details. Moving on, let's also, take a look again at how Asian markets are shaping up. Now, let's start with the S&P ASX 200. That one is down about 0.2%. Well, it is a sea of red across the board. Hong Kong's Hang Seng Index, that is also trading about 0.2% lower at that 25,770 mark. On the other hand, we have South Korea's Kospi, which is also trading lower. It is the second in line when it comes to leading losses. It's down about 0.9% at that 3,181 level. On the other hand, Japan's Nikkei, that's the one that's leading losses. It's down more than 1% as we speak at that 42,361 level, down about 440 points as we speak. On the other hand, China's Shanghai Index, that's down about 0.1% at that 3,872 level. On the other hand, we have the Nifty, which is still implied Nifty still suggesting a downtick of about 63 points at open at that 24,922 level. In fact, we just spoke with an expert who's suggested that the market may not react a lot because the Trump tariff news was largely priced in, but still a gap down opening is what we are expecting. But let's shift focus to the big boy Reliance now. Now, Reliance AGM is set to take place on August 29th. My colleague Ashesha is standing by to tell us what to expect or what the street is expecting from the annual meet.
Well, yes, all eyes will be on Reliance's AGM, which is scheduled to happen on the 29th of August, that is Friday. And the three key expectations from Reliance's AGM this time around. One is with respect to potential listing of Reliance Jio, and any kind of commentary with respect to Jio IPO will be keenly awaited from the address from chairperson on Friday. Meanwhile, any kind of AI-related plans across their spectrum, it could either be from Jio or any of its other business verticals, will also be keenly awaited. As far as their FMCG business is concerned, any kind of expansion plans that come through, any kind of big announcements for their retail business and FMCG business will also be something that the street will be keenly watching out for. So these are the three main expectations and that the street has from Reliance's AGM this time. Let's also put the spotlight on some of the important commentary that Mukesh Ambani has done in their AGM over the last few years. In 2017, they launched their Jio phone with a refundable deposit of 1,500. In 2018, they launched Jio phone 2, which was available at just 2,999. We also had some big Aramco investment that was announced in the AGM that was held in 2019. So over the years, Reliance Industries and the kind of announcement they've done has always kept investors on the edge. In 2017, they also launched an iPhone. They also launched a Jio phone. And we'll also put the spotlight on some other announcements. In 2020, they announced Google investment. Let's also put the spotlight on 2024 then last year, where 1:1 bonus issue was announced. And this, remember, was a key trigger for the stock. Telecom and Jio platform, as far as that is concerned, they also said that they aim to double revenue and EBITDA over the next 3 to 4 odd years. And they also announced New Energy to become as profitable as their O2C business over the last 5 to 7 years. So those are some of the important announcements that were done in Reliance's AGM over the last few years. Let's also put the spotlight on the stock performance and how the stock has performed before, on the day of AGM and after the AGM was announced. In fact, in particular, in 2019, 10 days before the AGM, the stock shot up as much as 8%. On the day of AGM, it shot up 10%. And after the AGM, we saw muted performance as far as the stock is concerned. Let's also put the spotlight on how the stock performed in 2024 as well. That was last year. Now remember, before the AGM, 10 days prior to the AGM, the stock shot up 2.5%. On the day of AGM also, we saw an uptick of nearly 1.5% last year. So all eyes are on any kind of announcement with respect to Jio listing, FMCG expansion, and any kind of commentary around Jio's expansion plan going forward will also be crucial this time.
All right, thank you, Ashesha, for telling us all that the street is expecting. Of course, potential Jio IPO, AI-related plans and FMCG expansion is something that the street will be eyeing for. But with that, we're completely timed out on this edition of Market Cafe. We'll be right back tomorrow, but don't go anywhere as the market will take all the action forward.